if you have a startup, you know how complicated sometimes it can be to find business funding, right? So in today's conversation, I want to talk about emergency startup business funding, but I want to really focus on working capital. How do you get a working capital loan to survive in periods of low or no income if you are a startup? Let's talk about that. I want to first give you an overview. So when we talk about working capital loans, we talk about emergency startup funding. You got to really understand what we're talking about. So a working capital loan for a startup is just basically I would say a pool of cash you have access to that helps you actually take care of short-term expenses. So the key word here is short-term. So when you think about working capital loans for your startup, think about short-term expenses. I'm talking about expenses that you have to really take care of within 12 months. It can be 3 months, it can be 6 months, 9 months, or 12 months. So if you don't take care of those expenses, you're not going to survive. Because if you are a startup, you got to really take care of business, literally, to be able to survive. So you got to pay, you got to pay your staff. You have to pay for inventory. You got to pay your rent. You got to pay like key suppliers. You got to pay things like office supplies, because otherwise, you can't really operate unless you want to work from home. But even if you are working from home, you still need to have a basic set of equipment or pieces of equipment that will actually make you a legit business, a legit startups. Okay, and what we know is that a lot of startups now, they actually they go to working spaces. They have co-working spaces, so they kind of reduce the expenses. But the bottom line here is that you will need access to a certain amount of cash. So that amount of cash for a startup is called a working capital loan. Now, working capital loan is kind of cool because it allows you, if you qualify, to actually have access to a line of credit. It could be a line of credit. It could be just a regular loan where you can just tap into it for specific purposes. By the way, boss, welcome back to the show. It's really a pleasure to have you here. We love to have this kind of conversations every now and then. And one thing I want to say here is that when we talk about working capital loans for emergencies, especially for business startups, you have to pay attention to the business credit, not the business credit score, the personal credit score of the founder. If you have several founders, okay, but their credit scores are really important. So be very clear about that, okay? If you want to qualify, no matter what, take care of your credit score. Let me now give you the steps I want you to follow right now if you want to qualify for an emergency startup business funding arrangement in terms of a working capital loan. Okay. And one thing I want to say here is that you really first need to sit down and ask yourself, my startup, how much do I really need for my startup? And in this economy, in the sector that I'm in, how much do I need? And again, I'm not asking you to give me a random number, boss. No. This is not about giving a random number. This is about just sitting down and say, listen, based on the situation, based on my analysis, how much can I qualify for? And how much do I really need? And when you talk about how much do I really need, I'm talking about how much can I repay? Because when you have an emergency startup business funding arrangements through a working capital loan, for example, you need to be able to know, okay, I want to get a $50,000 for my business. I want to repay this over, let's say, 1 year or 2 years, and I can qualify for it. But I will also have the means, the necessary revenue, the necessary income to be able to repay, for example, let's say $2,000 a month or $3,000 a month or whatever the monthly requirement, the monthly payment amount is. Okay, so I want you to really have that connection, that duality. You have to always think about those two things: what you can qualify for and how much you can actually repay. By the way, boss, I want to quickly remind you of today's topic so we can contextualize or recontextualize the conversation. I'm talking to you about how to get a startup business working capital loan. And the thing here is that you have to, going back to what I said, you have to really pay attention to your credit scores, the founder's credit scores. So the founder, if the founder has like minimum 600, this is kind of cool. This is fine. And what you want to do here is that once you have those two elements, you know how much you need and what FICO score you have. You want to start looking for information. You want to research and compare lenders. You want to compare and contrast. You want to really dig deep. You want to go granular here, okay? Because a lot of lenders offer working capital loans for startups, working capital loans for established businesses, from biz to credit all the way to Toro Capital to lend you. You have players out there who will take care of you, but it's important that you research them first to see which one actually is more suitable to you. And so one thing I want you to do here is you are trying to do the research, you always got to pay attention to what we call contextual analysis. In other words, you got to ask yourself, is the economy on a good path right now? Is the stock market really crashing or crushing it? Okay. What's really happening? Because see, those elements, those external elements really do have an impact on lenders' sentiment. It's called lender sentiment. Like how do lenders, how do they feel about the overall economy? And in particular, you have to also pay attention to the specific sector that you're in. So if you are in a sector that's currently having a boom, that's just fantastic, fantastic. But if you are in a sector that's really having some kind of problem, then this could be problematic. So, but the thing is that having that info beforehand can actually help you out. This is why it's really important to have a clear idea about the sectors you're in, to have the trends and the trends in your sector, to have to actually perform something called a SWOT analysis: strength, weaknesses, opportunities, and threats. So you are clear about your chances before you actually apply for a working capital startup business loan. And one thing I want to say here is that you want to gather the required documentation. So if you are a startup and you are looking for a working capital loan, normally the lender wants to make sure that you provide information that shows that you are a legit business, because there are a lot of how do I say this? A lot of businesses think that they are legit, but they're not really legit. Do you have paperwork from state authorities? Do you have a certificate of good standing from the state? Do you have when was the last time you filed your annual report? Because if you're a startup, it just means that you have been in business for less than a year. Sometimes it can be 18 months, but you still have to you still have to comply with state regulations. Remember that when we talk about business formation, things happen at the state level. Okay, so the stakeholders, or I would say the constituency that is really important here, is state authorities, the state government. Okay. And one thing I also want you to pay attention to, you got to have licenses and permits. So everything that really shows that you are a legit business will be really cool. And don't forget that if you want to apply for an emergency business loan, let's say an emergency working capital loan for your startup, the application process is important. You want to first pre-qualify. Pre-qualification is important. You want to protect, you want to preserve your FICO score. Do not go for a hard pull initially. Go for a soft pull. Now, here is the approach I really want you to pay attention to. So when we talk about startup businesses, whether you're having emergencies, whether you're going through a rough patch right now, whether you are going through a period of losses or no revenue for that matter, no sales, no revenue, no nothing, you gotta really ask yourself, do I really qualify for this? Do I qualify for this? How can I actually survive? Okay, and it's one of those things you gotta ask yourself. A working capital loan is kind of cool, but how do you actually get the loan to actually to repay itself? It means you need to have some kind of a business plan. You gotta have a business plan to monetize your business model. So you know, hey, listen, I may not have revenue right now, but 3 months from now, 6 months from now, I know, I'll get revenue. So if you have this sort of ability, if you have this sort of I would say interesting vision, this is kind of cool. Okay, and you need, when we talk about working capital loans for startups, you have different types of loans. You have term loans. I just want to remember that it's not just regular loans, because when you go to a bank, when you go to an online lender and ask for a working capital loan, this loan may have different names. So I just want you to, I don't want you to be confused at all. Okay. And by the way, boss, let me quickly remind you of today's conversation, today's topic. I'm talking to you about how to get an emergency, let's say how to get an emergency startup business funding arrangement. How do you get a working capital loan for your startup so you can take care of very difficult times? Okay. And so besides term loans, you also have business lines of credit. Okay. You have merchant cash advances. You have invoice factoring arrangements. You have cash, just regular cash advances. You have invoice financing arrangements, accounts receivable financing. So you have equipment financing. You do have a lot of loan types that could qualify for business startup working capital loans. So the bottom line here is that this is where I would, if you remember, I was just telling you initially, if you will, that you got to have a clear idea. You got to have a clear idea about the type of loan you want and the use of loan proceeds. Why do you need the loan in the first place? Now, here's a review I really want you to pay attention to. See, when we talk about working capital loans for startups, you need to understand that you can't just walk into a bank or you can walk into a credit union or you can even call an alternative lender or an online lender for that matter and say, listen, oh yeah, yeah, I'm having problems right now. I'm going through a rough patch and I just need some extra cash to fill in the blanks, so to speak. Well, if you want to fill in the blanks, the monetary blanks in this case, you got to have a clear idea of the steps you need to take, and always try to pre-qualify. We say this to a lot of our viewers, a lot of our even our business clients, our startup business clients. The thing is that you want to pre-qualify if at all possible. And the cool thing is nowadays, that's a very wonderful thing. Nowadays, a lot of lenders will allow you to pre-qualify. This is kind of cool. So you want to avail yourself of that opportunity whenever it's possible. You want to try to pre-qualify, okay? And it's also very important to understand that you want to determine how you want to receive your funds. Whether the lenders will send you the funds via wire transfer, ACH, into a bank account, or you want to have access to a line of credit, so they don't send you all the funds right away, but you have some kind of a line of credit. So when you need the funds, they will actually release it. So they will release the funds gradually, as opposed to giving you all amounts in one. So this is kind of fine. This is kind of cool. I mean, it really depends on your needs. It depends on how fast you need the cash. And what I want to say also here is that you have the opportunity to decide whether or not this is a great decision. This is a great option for you. And you also need to consider the repayment terms and flexibility for your working capital loan for your startup. Okay, and just make sure that you look out for fees. Oh yeah, I'm telling you, those fees are a killer sometimes, because I mean, some lenders, they actually I would say they leverage the fact that they have a position of power over you to just charge you, like to slap you with a constellation of charges. It's kind of crazy, but I mean, it is what it is. So you have it. So just watch out for those additional fees. You have you have the sales, like the closing fees, for example. Okay, you have the prepayment penalty fees. I mean prepayment penalties, not fees. You do have a lot of fees to think about. And also, one thing let me talk to you about the decision. Obviously, if you're a startup, okay, you're a startup, you have business needs, you have a working capital needs. You need cash to take care of business. You got to buy that inventory. You got to seize those orders. You have to pay the vendors, okay, real fast. So you got to make payroll. You got to really you got to expand, because you got to do a constellation of things just to survive and thrive, right? So you need cash. And so what should you consider a working capital loan for your startup? Because timing is of the essence here. Do not apply for a credit card, for a business credit card or emergency loan whenever you just want it. Timing is important. So if your business, let's say your business needs money. If you're a startup, let's say it needs money to cover payroll. And this can be payroll partially or in full. It can be like, I need like 20% more to be able to cover payroll for the next 2 months. And when it comes to payroll, you want to analyze things on a quarterly basis or every 6 months. Do not actually have a plan where you cover payroll only from week to week to week. If you start doing that, your employees will just leave your company like crazy, because you have no idea when it comes to managing your payroll. So you want to plan, you want to forecast how much you will need for payroll for the next 3 months, 6 months, 9 months, and 1 year. So when you do that analysis, you are safe. Okay, you are in good hands, so to speak. So if your business needs money to cover payroll or rent until the outstanding invoices are paid, this is kind of cool. And if your sales, let's say you are in an industry where you have to deal with cyclicality, you have to deal with seasonality, you have to deal with the ups and downs of the economy, you have to deal with business changes, business fluctuations. Okay, and I would say payment patterns from customers, from clients. Then you have to get a working capital loan for your startup. And also, one thing I want to say here is that sometimes for a startup, it takes time to actually monetize the business model. I mean, you can have all the best ideas in the world. You can have, let's say, you can have a lot of things, and you will realize that, hey, listen, things are not working. It's just that they take time. Sometimes they really take time. Before I close to this conversation, I just want to acquaint you a little bit with the working capital loans for startups, the pros and cons. Because if you have a clear idea about the benefits and disadvantages, you can decide in clear conscience whether this is the right for you. Okay, and because maybe this is not the right for you, you might want a different funding arrangements, maybe a business credit card for your startup, or you can actually say, you know what, I want a line of credit. I don't want a working capital loan. I want a line of credit. So it really depends on what you're looking for. So here are the pros and cons of working capital loans for startups. So the thing is that so funds can solve cash flow needs. So if you have liquidity problems, you can get the cash to actually take care of those needs. Not a problem. And if your business is actually, as I said before, in terms of seasonality, a working capital loan can help seasonal businesses cover some dips. Okay, so and hopefully the dips are temporary because they're seasonal. That's the whole thing about seasonality. And because see, a lot of startups fail not because they don't have smart ideas. It's just because that sometimes there is a gap between when they're paid and when they actually sell. So during that gap, you have to be able to survive. So if you don't have access to a working capital loan, you're not going to be able to survive. It doesn't mean your business model was bad in the first place. It just means you had no gas, no monetary gas to actually survive in those, to actually keep going, to be on the road. Okay. And one thing we love also is that working capital loans can actually give you, like, it can give you access to funding all the way to $2 million for your startup. So a startup that has access to $2 million, this is really cool, potentially though. And you have flexible qualification requirements. This is kind of cool also when it comes to the pros of working capital loans for startups. What about the cons? You have lenders who might require a personal guarantee. Now, the issue of personal guarantee is something very important for startup founders. And the thing is that if you find a lender who's okay with not giving you, not asking you for a personal guarantee, go ahead and sign right away. And you may have, for working capital loans, you may have to deal with short repayment terms. Some lenders will charge you high interest rates and other processing fees. I spoke earlier about all the fees that they might charge you, like prepayment fees, closing fees, and whatnot. And some working capital loans for a startup, they actually require weekly or daily payments. So you got to deal with that. It's something that it's not always easy to deal with, and because, as I have said on other shows, it could be disruptive for your liquidity plans, for your business liquidity strategy. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about emergency startup business funding, no revenue. How do you actually get it? How do you get a working capital loan to take care of business literally, and when times are tough? So I gave you an overview. I gave you the steps, the approach you to take, the review, and the decision. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.